So yesterday I asked you guys to consider, of all these accounts we've talked about, which one do I need? And you answered that question and tried to come up with one. Which one do you think is going to be the best for you? And then I asked you to maybe consider that the question is not one. The question really is which ones do you think you should have? I'm going to probably argue that a solid strategy for us for managing our money is perhaps having a couple of these accounts. Um, so, first, hopefully, we can all recognize that keeping your money at home, keeping your money in a piggy bank or a shoebox or in the bottom of your closet is not a great idea. Um, Not only are you in no way protected, you have no security on your money. Um, the money that you put into your piggy bank is going to sit there for as long as it's in there. It's never going to grow. It's never going to do anything for you. The $200 you put in there is going to sit there um, until the end of time and still only ever be $200. Um, so can we all agree that no, 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 this is not a good idea? Let's stop this, and we're going to take this off the table. Okay. So of the four accounts here, where should I put my money? I think of the things we've been talking about, these are important things to keep in mind. Number one, access to your money. Do you have the ability to get the money when you need the money? Number two, interest. Can we perhaps, if I'm going to put money away for a while, can I get some interest on it? Can I get the best interest rate that I can find? Um, and then three, how else does the account work and what are some of the other features? Um, in my opinion, here's what I think we need to do. Number one, all of you should have a checking account. You got to go get one. Yes, it doesn't offer any interest, but that's fine. The checking account is the account that is the most flexible. Again, to put it in terms we used in a previous video, it is the most liquid. Out of all of these, it is super easy. There's lots of ways to get money out between your debit account and your debit card and your checkbook and an ATM and online banking. And there are so many different ways to do that. I'm probably going to argue that all of you should have a checking account. But I'll probably also then argue that that's probably shouldn't be the only place you keep your money. Why would you give the bank your money and not have them pay you interest? If we go all the way back towards the beginning of this unit where we talked about the rule of money, the rule of money says when you use someone else's money, you have to pay for it. Checking accounts violate the rule of money because in most cases, you give the bank your money and they don't have to pay you interest. That's not good, not good for you. So I'm going to probably argue that should you have a checking account? Yeah, you should. You need that flexibility to be able to spend your money how you need to. But I wouldn't recommend keeping all your money in a checking account. Perhaps that's where a savings account could come in. The savings account, even though the rates are not great right now, it's better than nothing. You can get a decent interest rate on there. So perhaps you would keep a lot of your money in a savings account and then be able to move it out into the checking account when you need it. I know for me, I have very regular bills that come up. I know exactly when my rent is due, usually right at the beginning of the month. And I know when my insurance hits and all these other, my car, blah, 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 all of these other expenses I have, I know when they're going to come up. So I could maybe even schedule money to come out of my savings account at certain times during the month to be able to cover bills and things I have to pay out of the checking account. So why leave your money whether you're going to get no interest, but you can leave it here, we'll at least get some interest. CDs. Yeah, you can't touch your money for a period of time. But in a way, I think there are two benefits to that. Number one, you can get better interest rates that way. I can get 1.5%, 2% on my money, which is better, again, than nothing over here, or less than, just slightly more than nothing in the savings account. Um, think about a certificate of deposit as a great tool for you to possibly use if you're trying to save for the long term. How many of you, when we started this discussion, say that, yeah, I want to be able to buy a car in 6 months, 9 months, a year, 2 years? I want to be able to move out of the house, and I want to be able to pay my own rent, maybe when I graduate college. I really want to go on a vacation, maybe not this summer, but the summer after my freshman year of college, I want to go on vacation, right? If you have money right now that you want to be able to maybe put away and get a better interest rate on, well, if you can do without it, maybe you can put it here and get a better interest rate. It's also going to keep you from spending that money on other nonsense you don't need. You're going to make a commitment to that money and leave it alone for a period of time. So if you have kind of extra money laying around that you want to be able to get better interest on, maybe a CD is the right thing for you to be able as another savings tool. Maybe you don't need the money now, but you can wait on the money later on. Great. Do you have money you want to try to protect and stop you from spending on frivolous nonsense? Maybe a CD is going to be a better option, a good option for you. Money market accounts, I don't think for the average person that you could make your checking account into a money market account. The restrictions on the number of times you can access your money, the restrictions on the number of times, the number of ways you can access your money, the restrictions that they place on like how big checks can be, is probably not a good idea for your primary, I say, active money account. But maybe you have money that you're squirreling away for other things later on. I have a savings account that is separate and apart from my normal bank, and this is kind of my big savings account. And I dump money in there every month, and it's just growing. And I really honestly don't really think about it very much. But it makes much more interest than my regular savings account does. But when I'm looking to spend money, especially on big things, I can go to there very easily and pull money out. When I went to go buy my car, um, I bought the car and paid for it over time, called financed. But usually when you buy the car, you have to put some money up. So I had to take a couple of $1,000s out of the bank to be able to put down for my car. So a lot of that money started in my money market account, and when I needed it, the week before I wanted to go buy the car, I transferred money out of this account to my checking account, so that when I was sitting in front of the dealer, I could write him a check for a couple of $1,000s and be able to hand to it, and the money was there. So perhaps you can look for a higher yield in interest, higher yield savings account, and maybe that can be a place where you can put larger amounts of money that you don't necessarily need on the day to day, but you want to just let it sit there and let it grow with interest. And then when those big things come up, like trying to buy a house or buy a car, or save for some significant expense in your life, do you have a place to hold on to that money? Everything we're talking about here is really just in the banking world. We haven't really talked about investing. That's another topic for another day. But I would again perhaps argue that one of these accounts is not enough. That one of these accounts is not going to do it for you, but perhaps you need a combination. I would almost, at the very minimum, recommend a checking account and a savings account. And then as your needs kind of expand from there, perhaps a CD and a money market deposit account can be a great tool for you to help you manage your money.